All right, now we'll take a trip to London, where Juliana Olainka is standing by to bring us up to speed with the latest development and reactions to the GDP numbers. Hello, Juliana. Good afternoon.
Now I must call.
So please bring us up to speed with the market numbers and how investors are reacting to the GDP numbers.
Actually down. There's a little bit of breaking news. I'm not sure if you managed to discuss this with Chelsea and Frankfurt or not, because I didn't hear your discussion there. But US health authorities have put a pause on the Johnson & Johnson jab. They've become the latest vaccine manufacturer to be caught up in this blood clotting scandal. Health authorities, well, the Food and Drug Administration, have said that this is only being done out of an abundance of caution. But of course, you can imagine this is sending shockwaves across global markets. I know earlier the African Union actually stopped a batch of AstraZeneca vaccines in favour of this one-shot Johnson & Johnson jab. And I know that even here in Britain, they had ordered some to replace some of the AstraZeneca concerns. And this has sent the FTSE into a turmoil. So the all-share is down 0.04%. The FTSE 100 is down 0.11%. And the FTSE 250, the domestic market, that's up by 0.17%. I presume that's all down to the pretty positive but modest growth in GDP in the month of February. In the currencies market, the British pound also up on the US dollar by 0.04%, up on the euro by 0.19%, and up on the Japanese yen by 0.02%.
All right, well, I'm very sure calling off of the Johnson & Johnson will also put a little bit of problems in the vaccination of the people and obviously the economy. Well, we'll see how that plays out in a couple of days. But Babcock International, UK's second largest government defence contractor, is cutting 1,000 jobs and has announced significant write-off that will affect profit. Do you have any idea why this is happening now?
Well, it's an interesting story because even though 1,000 jobs are going to go, as soon as Babcock, the defence giant, made this announcement, their shares surged by 25%. One of the analysts, JP Morgan, said that their trading update wasn't as benign as had feared. They are cutting these jobs. They did a 6-month update showing that they were quite significantly financially hit because of the COVID-19 pandemic. Their profits fell 64% in the 6 months, I believe, from March. Now, we know they've got 30,000 jobs across the world. The majority of those jobs are here in the UK because they are, well, their biggest contractor is the Ministry of Defence. We're expecting about 850 jobs to go. We do actually have a statement here from the Chief Executive, David Lockwood. He said, "We're creating a more effective and efficient company through our new operating model, and in line with our new strategic direction, we will rationalise the group's portfolio to help strengthen our balance sheet." So yes, although it's unfortunate that those jobs will go, it cheered investors as their shares were up by a quarter at intraday.
Well, and I wonder if JD Sports would be able to absorb, even with some of those jobs, as they say they will open 65,000 square feet warehouse near Dublin to tackle post-Brexit trading problems. Can you tell us more about that, and especially why Dublin?
Yeah, this is an interesting story, but a typical story because, of course, since new trading arrangements have been made between Britain and the EU, any British company that's exporting to the EU that has components in their materials that are not made in Britain has to pay an extra levy. Lots of companies have stopped trading with the bloc because of this reason, but JD obviously isn't able to do that. So they've already opened a facility, I believe, in Belgium. Now they're going to be opening a second warehouse in Dublin, which is Ireland, part of Europe, so it's going to be much easier for them. But I think, Int'l, the biggest story of the day is JD's trading update showing that revenue over the period, over the year, was up to £6.2 billion. Profit before tax to the end of January came in at £421 million. And if you think that for the majority of the period over the past year, their stores have been closed, that's not bad from the £439 million they paid in the year before. A lot of market analysts had put the figure up at about £230 million. So JD Sports does remain the king of sports retail here in the UK, and I can testify that by myself. Yesterday, I was definitely getting pushed and shoved by a lot of teenage boys that were queuing up for trainers outside JD Sports when the easing of restrictions happened in England yesterday, Annie.
I wish we could see your feet to see if you eventually got one. Thank you so much, Juliana, and enjoy the rest of your day.